Hello traders and welcome to another video review. Today is Wednesday, July 27th, 2022. Let's start with the Forex calendar review, and just let me say in the beginning that you don't have to hide the fact that the key event of today is of course the Fed interest rate decision, Fed statement, and then of course press conference. Statement and interest rate decision will be published at 8 p.m. as usual, and the press conference will start 30 minutes later. The market participants expect a hike from Fed from 1.75% to 2.50%. Any hike bigger than this will be very bullish for American dollar. Of course, if the Fed disappoints, however, we might see a big sell-off of the US dollar, because it will mean that there will be no more than 3 hikes this year. So that's kind of a disappointing, and it's not in line with the expectations of the market participants. So what else do we have here? During the New York session, we got data from the US economy. Core durable goods orders scheduled for release at 2:30, pending home sales scheduled for release at 4 p.m. and crude oil inventories scheduled for release 4:30. So it's all about the New York session today, and I think we might see interesting movements on the Forex market triggered by one of these data release or even Fed interest rate decision. So let's start with all of the pairs related, all of the important pairs related to the American dollar, and the first one will be euro dollar. Daily time frame chart of the euro dollar is showing our scenario of the ABC to the upside is developing perfectly. We just hit the level of 50%, 1.0282. This is the top for the wave A. Then we got the decline in wave B towards the level of 1.0126. This is the technical support. However, the low was made at 1.0108, so like at 20 pips lower. However, it looks like the wave B might be done, and we should see increase here in wave C towards 61% at 1.0361. This is the plan for the euro dollar in the for the few next days. However, please notice the situation when the beginning of the wave A, which is the low of the 14th of the July 2022, 9,953 pips is violated, then of course this scenario is invalidated, right? The next targets for the wave C, if 1.0361 is violated, are technical resistance 1.0470, 1.0490, and then highs from the end of the June 1.0615, 1.0626. However, the key technical level is still located at 1.0788. During the next few hours, we will see if this scenario will be continued to the upside or invalidated. US dollar and Japanese yen. Daily time frame chart of the US dollar to the Japanese yen is showing us that the recent high made at the level of 139.40 needs a correction. So right now, let me just copy this this line here and put it on my screen. There you go. So this is of course local technical resistance made by the recent high. What do we need here is of course a slight decrease, but the volatility is not that big, because of course we are waiting for the Fed decision, so volatility is subdued. However, we still can go lower, even towards the level of 151.50, which is the technical support, and this level will be the overbalance level, minus 5.75% if we get there. However, any decision of the Fed bigger than expected, so if Fed hikes more than 2.5%, we will see a rally of the US dollar versus the Japanese yen. US dollar index, then if we talk about the US dollar, there you go, we we are bouncing from the moving average. This is 30-day moving average, very nice bullish engulfing, and of course market expectations are that Fed will hike, and then the bulls can continue the up move. Let me just put the recent high on the screen. There you go. This is of course the swing high, so it will act as a technical resistance. The situation is very, very similar to the other pairs. Volatility is not that big. Expect the yesterday's bullish engulfing, of course. We are still waiting for the market to resume the uptrend, because of course the uptrend should be continued on the US dollar index. What is gold doing? Gold is not doing much, because it's still inside of this very, very, very tight range here, and we are waiting for the interest rate decision that might affect the gold market. We might see a jump higher towards 1,753. However, as you can see, still we are trading below the key technical resistance, below the trend line, below the 30-day moving average. This is daily chart, so it's an important moving average. And there you go. This is the bigger outlook for the gold market right now. If we see the corrections here, we got about 5.83, and the next one was 5.83. So this is here, and the other one was from that low to, let's say, this high. It's 5.8. So we need at least 5% here of a rally in order to achieve the overbalance, and then the uptrend might be continued. Of course, S&P 500, related to the decisions of the Fed. The same situation, ABC to the upside, might be completed, might not. We need the high was at 4,012, and this is 4,036, so just a tad below the 1-to-1 Fibonacci extension. The recent high was made, so maybe there will be like a pin back here, and then market will be ready to drop. So please notice the fact that this is very, very important level as well for the S&P 500. Of course, we are still trading below the key supply zone nevertheless. And the last but not least, let's take a look at the Bitcoin, because there is a very interesting situation. What is going on here on the Bitcoin? It's moving inside of the channel, but for how long? Recently, pressure was made by the bears. The bulls couldn't break above the short-term trend line. We got a breakout lower towards 30-day moving average, and today we are trying to move a little bit higher from the moving average, from the long-term trend line, and we are balancing on the edge of the lower channel line. So any breakout lower, any big red candle like this for today, or maybe tomorrow, or maybe on Friday, is very bearish for Bitcoin, and then we should see 18,916, 18,640 very, very soon, or even the lows of the end of the June at 17,600. Only a valid breakout above 25,367 and breakout out of this corrective channel will change the outlook for more bullish, because the blue level here is a game changer for bears, of course. So please keep an eye. 25,367. This is the level for the Bitcoin, which is the most important in the coming days. Will it ever be hit? We will see. For now, it looks like there's a big bearish pressure, high bearish pressure, and we might see some sort of the breakout out of the channel lower towards 18,000. That's everything from me for today. Before the Fed interest rate decision, please stay vigilant, please stay focused on the levels during the data release, because it might be very violent session. I hope we will see each other tomorrow for another technical analysis video. So stay focused, stay vigilant. Thank you very much for watching this video, and see you tomorrow. Bye bye.